Every year, millions of people file their taxes without actually understanding what they're doing. They plug numbers into an app, hit submit, and either get a refund they're excited about or owe money they didn't expect. And they have no idea why either happened. This video is going to change that. By the end, you'll understand what a W-4 is and why it matters, why some people owe the IRS and others get money back, and exactly what you need to do before you file. Whether this is your first time or you've just been guessing for years. Income tax is the government taking a percentage of your earnings to fund public services. Roads, schools, military, social programs. That part most people know. What most people don't understand is that you don't pay one flat rate on everything you earn. The US uses a progressive tax system, which means different portions of your income get taxed at different rates. Here's what that looks like for a single filer in 2026. The first $12,400 you earn is taxed at 10%. Income from $12,400 to $50,400 is taxed at 12%. Income from $50,400 to $105,700 is taxed at 22%. And it keeps going up from there. The key thing to understand, if you make $60,000, you're not paying 22% on all $60,000. You're only paying 22% on the slice above $50,400. The rest gets taxed at the lower rates. This is what people mean when they talk about tax brackets. You're only ever in the highest bracket for the top portion of your income. When you start a job, your employer hands you a W-4. Most people fill it out on day one and never think about it again. That's a mistake. The W-4 tells your employer how much federal tax to withhold from each paycheck. You're not paying taxes in one lump sum at the end of the year. Your employer pulls it out of every check and sends it to the IRS on your behalf throughout the year. The W-4 is how you control how much gets withheld. And if you fill it out wrong, you either overpay all year and get a refund, or you underpay all year and owe money in April. This is the part people find most confusing, so let's make it simple. A tax refund is not free money. It means you overpaid the government throughout the year and they're giving your own money back, with no interest. Getting a $2,000 refund means you gave the IRS an interest-free loan for 12 months. That $2,000 could have been in a high-yield savings account earning 4% or 5% the whole time. Owing money means the opposite. Not enough was withheld from your paychecks, so you have a balance due when you file. The goal isn't a big refund. The goal is to break even. Get back close to zero so you're not overpaying or underpaying. You can adjust your W-4 at any time by submitting a new one to your HR department. Common reasons people end up owing. They have multiple jobs, and each employer withholds as if that's your only income. They do freelance or gig work on the side with no withholding at all. Or they claim too many allowances on an old-style W-4. If you're excited about your tax refund, I need you to hear this. That refund is not a bonus. It's not free money from the government. It's your own money that you overpaid all year. And the IRS just held on to it interest-free for 12 months while you got nothing. A $3,000 refund means $250 extra came out of every single paycheck. That money could have been sitting in a high-yield savings account earning 4% or 5% the whole time. Instead, you gave the IRS a free loan. The goal isn't a big refund. The goal is to break even. Go into your HR portal and update your W-4. It takes 5 minutes and you'll start seeing more money in every check immediately. Filing taxes is less complicated than it sounds once you know what you're collecting. You need your W-2, which your employer sends by the end of January. It shows how much you earned and how much was already withheld. If you did any freelance or contract work, you'll get a 1099 instead. And unlike a W-2, nothing is withheld from 1099 income, which is why freelancers often owe money. You also want your Social Security number, any student loan interest you paid, that's deductible, and records of any other income or deductions. Most people under 30 with a single job and no major life complications can file for free. The IRS Free File program lets you file at no cost if your income is under $79,000. Free Tax USA is free for federal returns. Cash App Taxes is also free. There is no reason to pay a filing service $100 to submit a simple return. One thing to know about deductions. You can either take the standard deduction or itemize. For most people, the standard deduction is higher and easier. In 2026, it's $16,100 for single filers. That amount gets subtracted from your taxable income before your tax bill is calculated. Itemizing only makes sense if your individual deductions, mortgage interest, charitable donations, state taxes, add up to more than that. For most people your age, they don't. The federal tax deadline is April 15th. If you can't file by then, you can request a 6-month extension. But the extension is for filing, not for paying. If you owe money, you still owe it by April 15th. Paying late comes with penalties and interest. If you're getting a refund, there's no penalty for filing late. But there's also no reason to wait. The money is yours. Taxes feel complicated because nobody explains the fundamentals. But once you understand brackets, withholding, and why refunds aren't actually free money, you're ahead of most people. File early, use free tools, and stop leaving your own money with the IRS for no reason. Next up, we're covering credit cards. How to actually use them to build credit without going into debt, and the one habit that separates people who win with credit cards from people who get destroyed by them. Subscribe so you don't miss it.